Hey guys, it's good news. I'm Mitch Biesmeyer here for your Monday market update with Weichert Realtors Centennial. Here to tell you that last week we got a CPI report that showed inflation levels were lower than expected, which meant that mortgage rates went down, in some cases 70 basis points, which is a huge relief to the market that we've seen. Of course, the Fed came out with their wet blanket policy of making sure nobody's too happy by saying that it was way too early to make any determination of any kind of trend going on in the market, and rates are likely still to have a few more hikes. So let's take a little dive into what they're talking about when they say the mortgage rate's not that bad. So if you look here in this graph, this is the historic graph of the 30-year fixed mortgage rate average in the US. And you can see by decade, currently we're over here in the 7% range in 2022. But if you look back, just in the last decade, we've had lower rates, but before that, in the early 2000s and the 90s, and especially the 80s, this was par for the course kind of rates that we're looking at around that 7% range. What that means, maybe we are returning to that normal of a 7% mortgage rate, and maybe it's here to stay for a while. It's just going to take consumers a while to get used to the new normal of a 7 or a 6% mortgage rate on a 30-year mortgage. Now, the question is, how does this affect you? Look here at the buyer traffic and how it's been affected by these increased mortgage rates. Also, an election and threats of a recession have just decreased buyer traffic on the market, which is really interesting because we're in a market where we're still in really low inventory. So there should be house price appreciation happening because we have such low inventory of houses for sale. But what's actually happening is house prices are leveling off because of this lower demand in terms of buyer traffic. You can see here we're at an average monthly showings of 4.1 showings per listing per month, which is down about a third since last year at this time. And it's the lowest it's been since December of 2019. What this means is even though we're in a low inventory market, there are big opportunities out there right now for buyers because there's just not that much competition. So you got a lot of buyer leverage in this market. If you're looking to sell your house, you may be concerned with these numbers, but it's key to know if you get a good realtor that can do the right marketing and exposure for you to make sure you're getting the maximum price and selling in the shortest time frame, like we do with our proven selling system. You'll have the opportunity to sell your house with plenty of equity and plenty of appreciation that's happened over the last 2 years. And you get to go buy in this market where there's a lot more leverage, especially if you're buying in a higher price range. You're going to have a lot more leverage and opportunity, like we talked about last week. So good news on the real estate market. We'll keep you updated. You guys keep coming back. We'll keep you updated on the OKC real estate market. See you next week.